Well, hello there, and welcome everyone to the Advisor's Edge podcast. I'm your host, Rob Jacomen, and I'm joined with some super exciting guests here today, guys. Chad, I have to tell you, knocked it out of the park. We have two phenomenal guests. And again, our mission and purpose is always to provide value to the financial services industry. So we want to bring some super exciting topics and phenomenal guests. And today we did it again. So we have Kanishk and Phil on with us today. And Chad, how are you doing? I want to turn it over to you because you know these two guys, and there are some really sharp guys in the industry, and I think there's going to be a lot of value today.
Absolutely. The fun of it is Kanishk is from London, and they have some new rule changes over there. And, Phil is a great guy we've known for several years, ran into him at NAPFA. And I was talking about, hey, I'm going to be talking with Kanishk and the changes. Let's kind of have a panel discussion about compare and contrast what's going on in UK, what's going on in US. But while we're at it, we want to make sure that we stick with the compliance stuff all around the world. So I'm going to read a quick little thing here, okay? So the views shared are our own and not constitute financial advice. Please speak with a professional before taking any action. So we'll get the compliance stuff, make sure we get that good. Kanishk, thank you for joining us. Thank you for reaching out. And the whole idea today is just get a broader perspective of the profession that we work in.
Yeah, no, I'm most welcome, and thank you for having me on this show today. I'm excited.
Absolutely. And let's tell us a little bit, just bring us up to speed in London. What do they call you? Financial advisors? What kind is your position, and what does it look like?
Yeah, so I run a practice called Compound Wealth Planning, and what we do is we call ourselves financial planners or financial advisors, effectively doing something similar to what you do over there, which is to kind of take responsibility of our clients' finances and be there for them with anything to do with money matters, guide them, support them, be the sounding board, and offer guidance on what they should be doing to achieve whatever goals and dreams and aspirations they may have. So yeah, it's quite a holistic offering, so to speak. And yeah, I've been doing this now for the last 10 years, and it's been a very exciting journey. And yeah, I'm glad I made the switch from my previous career, which was derivatives trading at investment banks.
Awesome. That's great. Yeah, lots of good depth of experience. And when it comes to money matters, I think wherever you're at in the world, we all have to have it, and we want to do the best we can with it. Phil, Rebel Financial, you've been an independent advisor for a while now. I think we met initially through NAPFA. Give us the elevator pitch on who is Rebel and what's unique about you guys.
Sure. So we're independent financial advisory planning fee in Columbus, Ohio. Went independent probably almost 13 years ago from being in the insurance broker-dealer world, and have transitioned over to what we call fee only. So I think what we're talking about here is how fees have changed, and commissions, and versus the ongoing fees, and fee only to us is only taking payments from the client. And then we've kind of blossomed out from that. But again, I'm here kind of to support and make it awesome, I think, to compare and contrast and add some value to like some of the things that Kanishk and their firm. And I think it's awesome for us to hear about what's going on over there because UK is really close to us, right? And it's crazy that we don't know more about what's going on across the sea, right? So
absolutely. Hey,
Chad, I want to share something. So I met Phil in NAPFA in DC. And you know what the one thing I remember about you, Phil, is as I was standing there, you came out of one of the breakout rooms, and then you're standing there talking to Chad, and I walked up, and I remember you're a tall guy, like you're tall, and I remember you carry with you this leather journal that you probably carry with you everywhere, and you take notes, right? All right. So isn't that interesting that's what I remember that about Phil, and I can just imagine him like in these
I have all
breakdowns.
kinds of different books. Like one for my hard work, one's for my admin stuff for the business. This one's for all the learning stuff and the business partners. And then I got another one for my actual client meetings and stuff. So I'm a journaler. You got me.
You know what? I know we took a little side tangent here, but here's the beauty about doing things analog. I'm an analog guy, and I know with AI and all these note-taking things, I still do things old school, because for me, rather than typing it up or having this AI note taker, which are fine, they're great. I love technology, but there's something special about just writing down ideas, just being in the moment, being at a conference or at an event, and you're just taking notes. And for me, that's something I just
agree.
love to do.
It doesn't replace, it's complementary. And the AI's gotten good. I can like take a picture of my notes, put it in my app, and it'll like read it. It will read my cursive, and like you can go from there. You can get the best of both worlds. You know,
I think it's the distraction aspect, right? The beauty of analog is that I think one of the byproducts of all the AI and tech is we just have 15 things happening at the same time, and it's impossible to focus. And kind of using that old school habits which have served us well, help us to kind of cut out the clutter.
I agree.
Absolutely.
Sorry about that, Chad, but we had to have a little sidebar there. I think that was kind of fun because that's how I remembered Phil.
It's great. I mean, this is about the people, right? Because we're all people and we're doing what we can. And no, that's awesome. We have so Kanishk, when you reached out to me, there's this unbundled charging structure that has changed in the UK. So first, I think it's helpful to hear what was it when it was bundled? What did that mean? And now unbundled, where are we going? And then we got to dive into it. And if we get rabbit holes, I think that's going to be interesting, because we'll just get to see how life is different.
Yeah, I mean, I think fundamentally what used to happen is that let's say for the last till at least about 2015, it was the way advisors used to charge was they used to get paid through commissions, so they used to get paid through products, and it was kind of an all-inclusive fee that the client would pay, and which covered the fee for the advice, it covered the fee for the management of the investments, and it could cover all the ancillary expenses that were there. And I think fundamentally, in the last couple of years, we've had something called consumer duty, which has been brought forward to the entire industry by the regulators here in the UK, which basically the objective of consumer duty is more transparency, right? And that's a good thing, right? Because ultimately, transparency for clients means that it is easier to earn their trust. I think that's the fundamental reason why, or the fundamental way in which we can earn trust faster is being completely transparent. And then that obviously leads to long-term relationships, which again is key for the industry and the role that we serve. So that came about a couple of years back. And I think since then, different firms, different organizations, different platforms have all tried to unbundle this one all-encompassing fee into various bits and pieces to say, hey, Mr. Client X, this is what you're going to be paying for advice. This is the bit that you're going to pay for the fund management. This is the bit you're going to be paying for XYZ. So that, I think, has been the big sea change over the last couple of years.
That's cool, because, so this is why I have Phil on too, other than just being a great guy, because you went independent, would you say 13 years ago, fee only? The consumer duty is almost equivalent with the fiduciary duty that the RIAs have. And
that's what it sounds like.
Yeah. So what that means, and so you've been focused on that. And one thing that you do really, really well, Phil, is you look at what the client's looking for and meet them there. And you've restructured a lot from, it's not the same old BD days of just get them in a product and run with it and try and help. How have you set that up as you built your RIA and what's been real helpful for you from a client perspective as you dug into that fiduciary duty as an RIA?
It is interesting because I do see a lot of similarity of like where the US has been and what you guys are doing. And it's a journey, right? And so like when I came into the industry, it's like you work for, a broker or a bank or an insurance company, and we work for them. And I think most people want to help their clients, right? And they teach us, at the beginning, like what to do and how to sell these things, and hopefully the client's better off. But again, you're kind of you're drinking from the faucet of what they tell you and they do. And I think the evolution over time has been that advisors have separated more from the product makers, and the exchanges, and whether that's broker dealers or insurance companies or banks or whoever that is. And we work more for the clients. And I mean, I love what the UK is doing there in terms of like separating those things out. And I think over the last 20 years, until recently, in the last like 4 years, we've gotten better about that, of being transparent, and the advisors on your side. And we need brokers, we need insurance companies. I don't want to make those things. I don't have the big bank roles to like insure huge risks and stuff, but somebody needs to sit on the side of the client, because the asymmetry of information is larger than it's almost ever been, of how complicated things are and how many choices there are, et cetera. And so standing up for the consumer is like we like to call it fiduciary standard. I think that's more important than ever. Where I say I think we're getting less transparency is not from our side of things. It's more from the bankers and the brokers and stuff, that they've gone to commission free and they make most of their money from spreads and how they sell order flows. And so again, I don't want to get too esoteric. I think that's a bad thing. I like, for a client to be able to see exactly what they pay, and you don't have to get the cheapest thing. You should just get the best thing for you. And we all know buying the cheapest bike for your kid is not necessarily the best thing. You want a good value bike that they're not going to get hurt on, that's going to last, 10 years, not 1 year, and somebody hurts themselves. So same thing in our industry. And I think, again, having a good financial advisor, if the things are transparent, you can make better decisions. And I think and I keep trying to do that with my firm, regardless of what the industry does. And I think people that do that, it's not all just about what the government does, and good business people and entrepreneurialism that care about their clients, that cream kind of rises. And I love hearing the story and being able to compare notes about what's going on.
Yeah.
Yeah, I think one thing, interestingly, when I left banking, I used to be at Credit Suisse and JP Morgan, and spent 10 years as a trader. When I was making the transition, which basically came about because I used to be very proactive with my own finances during my banking days, and I guess the proliferation of information was so low that I didn't even know that this industry exists till like 10 years back, like to the point where I used to just do my own research, figure out my own exemptions, allowances, and do my own planning. And basically it got to a point where my colleagues were coming to me when they used to get their bonuses and say, hey, Kanishk, you know what? You seem to know what you're doing. Can we just grab you for 30 minutes and maybe you can give me some ideas? And I guess that's when the light bulb moment happened, that, by definition of becoming more successful, you have less and less time to kind of look after your own finances. So I guess the point I'm trying to make is that it's still very new. The industry here feels like it's a lot of education that still needs to be done, because people don't realize that there are professionals that exist who can help with these things.
If I can jump in here a second, here's my area of expertise is in helping financial and insurance professionals become industry niche specialists and have that expertise and authority, and going after a very specific type of client. What I see right now is what you guys are talking about, and going into that fee structure and being very transparent enables you guys to be even further differentiated from your competitors. And what I mean by that is it's really relationship driven and trust driven, as opposed to this commoditized product driven approach. Can you guys speak a little bit about that and why specialization is so important at really going after a very specific type of client, that you can build that relationship and that trust at a deeper level with the structure that you currently have.
I would say I got a short thing to say to that. I was interested when we were talking before with Kanishk, and he was telling me about when you're meeting with clients, most of the time, or prospective clients, they don't have a financial advisor. They don't even know why they would need one. And I think, Rob, with what you're saying is more of a US problem right now, is most people have a financial advisor, or even if they're DIY still, they've interviewed financial advisors and made an informed decision that they're not going to hire one. So it's very competitive. And so if you don't have, and your niche of like what you're good at to really connect with, what is that old book, that blue ocean strategy, right? In the United States, it's like red ocean. I mean, we're fighting each other and taking clients from each other. And, Kanishk has this awesome opportunity in this blue ocean of really showing people the value of an advisor, that they're better off with him than without them, rather than having to fight, for every new customer against someone else. But it's still obviously a challenge. That's a hard thing to overcome mentally as well.
Yeah. And I think on that, over the last couple of years, is like, I think for the first time, we are starting to see personal finance as an industry starting to becoming more vocal about the value that we can potentially add. So whether it is through campaigns or ads, in fact, there are also some companies I know which are reaching out to the government directly to see if we can make personal finance a common subject to be taught in schools. Because still, you have all these graduates who come out and they have no clue about money, and they start earning, and then they get into bad habits very early on. So I think we are very, very early in that journey in terms of educating the customers and the audience on what we can do. Back to your earlier point about, I was just saying that going back to your earlier point about trust, when I left banking, I interviewed with some of the private banks, like Credit Suisse private bank was massive, and some other private banks in the UK are quite big. And when I interviewed with them, very quickly you realize that although your title might say advisor, ultimately you were in sales, where your role was to kind of push the products that these banks used to manufacture and recycle, which didn't quite align with me personally, right? And I think that's the point, that we need to kind of be on the client side to earn their trust, because that's the foundation, I suppose, for any sort of relationship.
Absolutely. We see that all the time here, that trust, the stronger the trust, really helps get going there. And one thing we do, we've got FPA or NAP for these different organizations that kind of at a large level across the US build that trust brand for the industry. At what in UK, is there organizations that help you there, or is that something that's still developing?
It's relatively, it is still developing. I think at the moment, the big focus has just been to clean up the image and change the perception of our industry from, let's say, being sales oriented or product focused to coming across and having the same level of respect as maybe doctors and solicitors and lawyers might earn. And I think this whole unbundling and the whole consumer duty has been a big step forward towards that, because for the first time we are able to get the client to see that, hey, listen, this is what I will be charging you for my time. And to be honest, clients are more than happy with it, I think, because they see the value very quickly in that relationship. So it's not an issue, and it's actually been a positive to build the industry and to get more clients that way.
I'm curious, Phil, for you, when you are digging in with clients, what's your most important way to connect and start to build that trust quickly, so that they can understand, hey, we're here to help you, not to just sell you X, Y, or Z?
I mean, I agree with Kanishk about that. The advisor should be separated from the product. And with us, I think a lot of our advisors have just really embraced that. And so it's more about, you got to connect with the client. It's like, why are you here? Tell us about what you want. What are you trying to accomplish? Because how could you even know what advice to give them or later on what product recommendation to give them if you don't know where they are in life? What's going to change? What are you trying to accomplish? And you know what? People really enjoy, stories, and especially stories about them or that can relate about them. And listening to people and getting those stories, especially if it's going to help you do your job, I think really makes that connection with people. And then of course, then after that, they're really gonna, what is that old saying? People don't care how much you know until they know how much you care.
Mm-hmm.
And so really with financial advisors, I think it's not as much about, we're all salesmen, let's be honest. It's like, are we selling products or are we selling ourselves?
Mm-hmm.
Because then after that, it could still be genuine, but you still have to be good at it. You have to have a process. You have to be able to connect with people. And then hopefully you built something that's really awesome to where when you convince them that they hire you, that you're going to do awesome things and deliver for them. And then it just gets better and better over time. And then you adapt with them as their life changes. But I would say the first thing is really connecting with people about them, who they are as people, regardless of your CFP, knowledge and all these things, about taxes and estate planning and stuff like that. You'll have somebody that, man, they could need it, will be in your office like falling asleep. That's what they say. The best thing is like when people come out and be like, man, Kanishk is the best person I ever met. It was a great conversation. And if they talked like 75% or more of the time, you're like, man, I didn't hardly say anything. But they think you're awesome because they talked most of the time. I think you got to get good at being a listener. Eventually, you got to turn it around and do your job and give some advice. But
That's right.
That's what I got to say about that.
I have a question for you guys on that. Chad, sorry to interrupt you. So along those lines, guys, here's something that I think is really valuable to financial advisors, the RAs that are listening and watching in our audience. What I think is most interesting, and when I go to these conferences and I ask these guys, like, hey, let me know, like, how are you guys marketing yourselves? How are you, in fact, bringing in new prospects and opportunities to have these conversations so that you can build the trust and you can build that relationship with them? Let's start with you first, Phil. In the United States, what are you guys doing to really drive new growth and new opportunity into your firm? And how are you guys marketing yourselves differently than competitors?
Yeah.
I would say our kind of niche is more values based. So we're a B corporation, so still for profit. But we care about all the stakeholders, not just shareholders. And a lot of the things that we build and we do kind of go down that stream of like, you could do ESG with us. You can do Christian values. I think we've got the best platform almost in the world for halal investing. And that's like Muslim faith based. And so we really like try to live by those things and then be really good at what we do in terms of adopting a lot of technology and early things and driving down costs. And from what we've been talking about, the fee side of things, it's complicated. And you know what? Again, we need our partners. And I'm not trying to throw anybody under the bus, but they're sharks. They are just profit maximizers on everything. They are going to take the biggest bite out of everyone that they can so that their stock price is going to go up. So their CEOs are going to get more stock options, blah, 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 blah. So again, we need them. But somebody needs to be sophisticated sitting on the client. That's like my main thing that I want our clients to understand is like, we are on your side. We need our partners. But one of my big goals is to make sure they get the littlest bite possible. And if we can stop JP Morgan or Huntington or, Schwab, from getting 3% out of you to getting a fraction of a percent, and I charge a fraction of a percent, we're all winning here. Beyond all the other stuff that we connect on and being good at our stuff. And I think that that's an important thing because behavioral science and how much like social media is crashing us down and these corporations know how to get into your brain and pull the dollars out of your wallet. They're getting good. So we got to be good too to help our clients keep it and grow it. So, yeah.
Yeah. Phil, are you primarily referral based? Would you say you're primarily referral based firm, or do you guys do some
We're
outside
weird.
marketing?
And I know most firms are because I do all the data, like the questionnaire stuff with Schwab and Investment News and stuff like that. I know most of our peers are like 70 to 80% referral. We're probably like 20 to 30%. And then we're maybe like 20 to 30% referral partner. So like Dave Ramsey and Paladin and different things like that. And then the rest of ours is just organic from like people looking us up on the web, social media, word of mouth, et cetera. Because we're just kind of a quirky, weird firm. So the more our brand gets out, it is better and better. But that sucks. When you're a small company, branding's hard,
Yeah.
And so we just got to keep working at it and give me some compound return on my branding efforts. Eventually.
Completely, Phil. Yeah.
And
Very
Kanishk,
interesting.
what about you in the UK? How are you guys able to? Are there certain regulations or certain things that prevent you from doing certain marketing initiatives? Or tell us a little bit about your business and how you're growing your firm, how you're having those conversations and building trust with people. What are you doing on the marketing front?
Yeah.
What are you guys doing in that area?
Yeah, I mean, good question. I think at a practice level, so at Compound Wealth, what it's predominantly dependent on referrals. So that's majority of our new business or new clients would come through existing clients putting in a word or connecting us. We are also quite active on LinkedIn. That's the most common social media channel in the UK to talk about. And I think outside of that, we are doing a lot of our main focus is education. So our main focus is education-based webinars or events, whether it is at, for example, my kids go to school. So we're trying to do something for the parents where we're going to get them into a room and just talk about things that they can do for their kids. Because as I mentioned earlier, it's still very new, the whole concept of taking charge. And I think post-COVID, with the inflation running extremely high over the last few years, everybody is now realizing that financial planning used to be a nice to do if you were earning well, and now it's become critical because you're just going backwards if you're not kind of optimizing it. So yeah, a lot of focus is on education-based events outside of our usual word of mouth and referrals. At an industry level, I think I would say that till about 5 years back, it was a very, very conservative outlook in terms of marketing, what we could and could not do. The general approach was, no, you can't do that. No, you can't do that. But now things are really opening up. I think in the last 12 to 18 months, we are seeing a lot more open-mindedness, and maybe it has come from the regulators relaxing their approach, that actually we do need to get the word out, and new ideas are kind of encouraged on how to reach the people and tell them about what we do.
That's so cool.
Yeah,
Thanks for sharing. Cool. That's awesome.
Yeah. Yeah. What for you, Phil? Kanishk is talking a lot about educating the clients, and clearly you've got a good brand. However expansive it is or not, as it expands, what are you finding in helping educate clients? Do they find the most valuable type of education? Is it certain subjects or certain points of life that they really start to dig in with you, or have you found something like that?
I think for most of our clients, it's already a lot of information and education. It's almost like overload for just the stuff we're doing for them. And so like when it's even tough to get them to do what they need to do for them, because it's cool for us to do everything for you, but I'm a kind of a believer in you need to know enough to manage your managers, But a lot of people, especially in our industry, they don't want to do it. And you can't knock them too hard because let's be honest. If they liked it and they had competency to do it, we would not have it now. So there's like that balance there. So, most of our client events and different things like that are more like entertainment, like a paint, wine, and dine, or let's go golfing. Not like, I don't do individual stuff. We're not a high net worth firm, but we do a golf scramble to raise money for charity, and we do like a sporting clays. And if people want to talk shop, that's fine, but most people don't want to. I do my own webinar every other week. And again, I've got people that work for me that are conservative and MAGA, but I'm progressive. So like a lot of my webinars are like pretty out there in terms of like, do I have to be laissez-faire to succeed in the economy? I'm doing one on universal basic income, in a month or what. So why I think it's the future. And I'm a tech person. I just started fintech. So I'm doing one on like the economics and investment in human robotics and stuff like that. So like, that's the stuff I like to do. But maybe I see like 1 to 2 clients on one of those out of like the hundreds that we have. So it's not necessarily, I think, what they want. It's probably more my passion than anything.
That's cool.
Yeah, the noise of life is what you both kind of are referring to. Is there is so many things going on in life and complicated. With all the wisdom and experience that you have, Phil, you're sounds like you're kind of helping sort that out for the clients. And then Kanishk, what you were talking about is just, it's gotten more complicated and it's more challenging because we don't really think about our personal finance as far as the margin that we have extra to go have fun, but certainly they need that, or to save it for future or whatever. So tell me about how you are helping your clients organize that.
I think to start with, we just take responsibility, right? So I think the approach we take is, if the client has had to chase us for anything, then we have let them down, because I think that's the starting point, which means that once we know the clients inside out, once we know their situation, their priorities, their current position, then it kind of our responsibility to keep an eye on what they need to do, keep an eye on what's changing in the budget, keep an eye on what's changing in the market. And we should be the ones reaching out at every single point to the client and saying, hey, you know what, this change is coming up. This is how it impacts you. This is what I recommend you should do. Here are the pros and cons. Let's make a decision. So the ultimate decision is always going to be theirs, but it is our job to kind of give them all the information to be able to make that decision. And then, of course, go ahead and then implement and execute whatever is needed. So that's kind of our starting point with the conversations, which obviously is all encompassing, right? So, and I guess the last thing I would say on that point is, we want them to reach out to us with any money related matters. So if they feel confident that, you know what, something's happened, we kind of know what we need to do, but let's check in with Kanishk. That's a win for us, right? Because that shows that we are truly becoming their partners in their financial journeys. And we are not just somebody who they come to when they need a product or they need something done.
And is that how it used to be? Is they just, the financial guys just, get me a product to get there? Or...
Yeah, I mean, as I said, like it definitely was not the case. I think historically it was very much product selling and commission-based approach, whereby the idea was, listen, if you've sold a product, then you kind of forget about that person and move on to make the next sale. And you ended up having advisors with 400 families, 600 families that they are looking after. So there was no concept of ongoing advice or ongoing support, which has now completely turned on its head. And now and again, this is credit to the regulators, credit to the big firms in the UK, whereby they have deployed technology, AI, etc., where we now need to formally document and evidence the touch points, whether we have at least seen the client once a year, done a thorough review, which I think means that the value that the client is getting is exponentially more than what used to be the case 10 years back.
Yeah.
So is everyone doing it, or are there just
Across
like a few like product advisors that are turning into like real financial advisors and planners on their own?
Everybody has to do it now. Like if you have the license to advise people, whether you are working in a tied organization or you're an independent, if you are charging advice fee, you have to do it. So ultimately, there is majority of the firms still charge as a percentage of the funds that they might be managing for the advice fee. So what you mentioned, that you just charge a flat fee for the advice you provide, is still very rare in the UK. But ultimately, it doesn't quite matter, in my opinion, as to how you charge. What is important is, have you been clear with your clients about what is being charged? And have you been clear about what value they can expect to receive from you? And as those two things are clear, then the detail, which approach you take is not as material.
So I have a follow-up question, because I don't know, maybe you guys are just better people than us. But like when we had this, there was a clear differentiation between like the brokers and the banks and the advisors that work for them. Like when stuff like goes on, they're more bureaucratic. They're documenting to say that they're following the law and the rule to still sell their products and make their money. Whereas the financial advisors, it sounds like you that went independent, that's actually saying, hey, the client is my customer.
Yes.
And like I'm doing financial advising and planning. You could both be complying with the law, but I would say that you're almost fundamentally different. Is that true, or am I wrong in like
Yeah,
thinking
listen,
that?
I think it's a good point, right? Like ultimately in any industry, whether it is advisors or lawyers or accountants, there are always going to be a few bad apples. I think fundamentally the change is real. And what has also happened is that the cost of trying to get away with it is extremely high. Like you basically get your license suspended. So I guess the deterrent to do something along those lines is much, much higher than ever before, which I think is a positive. Now, is that the ultimate end game or the ultimate destination? No, this is clearly work in progress, and I'm hoping that with more transparency, more innovative ideas on pricing structure and fee structure will come up to better align with the customers. But the biggest issue right now is education, as I mentioned. So it's not about this approach or that. It's just the fact that people need to realize that they could be much, much better off if they were to take financial advice.
Hey, Chad, I think this is a good moment to bring in, this kind of triggered my thought based on what Kanishk is talking about and what Phil, the follow-up questions that he brought up. I think it's a great moment for talking about or inserting Kaizen into this picture, because obviously you're a big fan of that. And what I've learned from Chad is whenever you're engaging with clients, obviously we have to do things that are valuable to the client. And number one is they come to you with a painful problem, right? And Kanishk, what you're talking about is there's an education component to it, but underlying all of it is they have a problem, right? They have a painful problem that they want to have solved. And I think that's the beauty of the independent space, is that people come to you with a problem, and your mission and goal is then, how do I transform this person's life? How to help them get to where they want to go, whatever that summit looks like for them. How can I help them transform them into a happy customer? And I think that's what I've learned from Chad. And I saw that moment right here to just kind of go a little deeper on your process, how you bring somebody in who has a painful problem, and how do you help them get to that point where they're a happy customer?
Yeah, so I mean, I can share our process, right? And I think we start from the ground truth is that today, in today's day and age, everybody wants choice, right? So they don't want to be prescribed one particular approach. They want choices with whether it is investments or whichever thing that you pick up. So I think for us, what we are trialing or what we attempt to do is, when we come across a potential client, our approach is that, listen, first of all, let us try to figure out the right strategy. Let's forget about products, forget about platforms. Let's just figure out what we need to do here, right? Should you be buying this house? Should you not be buying the house? Or et cetera, et cetera. So we actually start with cash flow modeling. We forecast their expected income, their cash flows over the next 20, 30, 50 years to show that if you were to continue on the current trajectory, where do you end up? And then if you were to implement the recommendations or ideas or suggestions that I have, then what is the expected outcome over the next 10, 20, 50 years? So that's kind of the starting point, and it is important for us to align with the client on that metric. And for that, we would just charge a flat consultation fee, right? Because this involves no product. I'm putting in my time and effort, and for that, you pay me a fee. Now, at the end of that, once we have decided and we've figured out that, okay, you know what, we are happy to make these changes to my finances, then of course, depending on the recommendation, there might be some commission involved if we are talking about insurance or mortgage, or there might be some management fee involved if we're talking about investments, which again, the client can then make an informed decision whether they would like to proceed or not. And I think this approach kind of marries the two. Of course, there are choices for them on the implementation front.
Love it.
Yeah. How about your process, Phil?
So Kaizen, you're talking about the Japanese philosophy of continuous improvement.
Continuous improvement. That's right. And I think you think that way and you operate that way, but you don't use those words.
Like, I had to actually look that up because I'm not familiar with it.
I had no idea as well.
But like, that is like how I live my life. I read like 5 to 10 self-help books, improvement books every month. Like, my employees like want to probably take me out and throw me in a bonfire because like I am scrapping things as fast as they're getting used to the new thing. And everything to me is a process. I mean, I've implemented like Scrum in like financial planning and investment management. And so we're always, and like, that's the main thing is I'm switching project management softwares every year because it's not good enough. You know, I'm like, man, we gotta get better. We gotta have this, and things need to be automated. We gotta have process, because how are you gonna get better if you don't have process? You know,
Yes.
And so like I am like 100% behind that, probably to a fault to where it aggravates people. But I do feel like over the last few years, especially as people have gotten into tempo and gotten used to it. And like, I do quarterly reviews for every one of my employees, and they have goals, and like, they're hard. I mean, like, they get mad sometimes because it's hard to get over 80%, and everybody's used to getting an A. Everybody gets an A in college. Everybody gets an A. Like, let's give a trophy to everyone. Like, no, if you got over 90%, I mean, you like murdered it, like good, you know? And then I really spend a lot of times thinking about like their individual goals, like what would actually move the firm forward? What would actually help the clients? And so like, there's all kinds of things I go into, but again, this is not about like us and like that. This is more about like the fee changes and everything. But yeah, you definitely hit something I'm passionate about on that. That's like what I probably spend half of my time on, you know?
Yeah.
So,
But it all comes full circle, because it all the stuff we're talking about today relates to how can we do things that benefit the client. And Phil, what you just mentioned is all these things are interrelated because it's all process, it's all part of a system, and everything we do in life, hopefully, you know, and I think that's the point that Kanishk, I think that's what you were talking about, is all the things we do are driven from how can this benefit the client? How can we make our process so good and so world-class that people refer other prospects? They are happy customers. They're getting educated, and we feel like we're really making a difference in people's lives. And I think that's why we get into the businesses that we get into in the first place. We want to make a difference in people's lives and help people.
I think you've completely hit the nail on the head, right? Like, I think for me, banking, the transition from banking was for the same reason, where you were earning well, life was good bonuses, but you just felt the lack of that purpose of like, what my entire career is going to look like. And I think fast forward 10 years, that's the best part, right? It's like when a client says that you've made a difference, that is worth a lot more than any advice fee that you might have earned the entire year, which is what I think keeps us going, I feel.
Totally
Absolutely.
agree.
Well, speaking of world class, we do have people from all over the world here today, which is really, really cool. And we talk about landing the plane towards the end, and I don't really want to be honest with you. I would love to just keep going and going, but we do have a schedule. So I'm going to ask you, actually, Rob, if you want to land the plane here with these guys, and we have some questions we kind of like to touch on the end, just to give us that feel, a little bit more who you are, because it's about who we are individually, how we connect, what's important to us.
I totally agree. And I think, Kanishk, I'll start with you. because I kind of led into it based on what I was just talking about earlier, and the question I asked you guys on the things that you do to benefit clients and to create value for people and really help transform people's lives. So as we're coming to a close here, what I like to do is get real and personal. And Kanishk, I want you to imagine yourself right now. You're advising yourself, right? And you're sitting with a client saying, hey, what does that summit look like for you at the end of your career? What does that summit look like for you? And as you look back on your career, how do you want people to remember Kanishk by?
Gosh, you know what? I've seen such questions. I've never really thought about them. I've always skimmed through, and now you put me on the spot, so I have to think and answer. I think the first thing that comes to mind as soon as you just said that is when I reflect back, I think the way I'd probably measure my success or failure is how many families have I been able to make a positive impact in, right? How many families have I been able to impact? And that could be a combination of clients of our practice who we help directly. It could be families where we have just gone and given a talk and they have taken something valuable from it and implemented it, which has helped them. It could be educational seminars, it could be LinkedIn. So I guess we want to touch as many lives as possible, and we're going to try to stay true to that mission and try to reach out on as many platforms and avenues as possible to make a difference. I think for me, I have come from a very humble background back in India. I got a break in my life when I got a scholarship to come to London and do my studies. But I remember thinking 10 times before buying a coffee because it used to cost £1 20 years back. So I truly realize the value of money and the value of compounding. And I feel there's a big impact I can make in that space with the people I work with.
Wow. Phil, you got some big shoes to fill on that answer. Phil, how about yourself?
You know, it's interesting. We just went to a fixed income bond conference at the JP Morgan Chase compound up in northern Columbus yesterday. And I mean, it's impressive. I mean, it is like this huge thing. It's 13,000 employees there. It's kind of wild. But like when I was looking there, and of course I like to read a lot, and I've read most of the biographies of the presidents and historical figures. And so just like JP Morgan, so there's a huge picture of him down there and just thinking about things. And of course, most of everything that came from them, a lot of it is he's responsible for that. And then I think about what he did in history, and while he was a smart, awesome, built master of industry, I don't know that he was a very good representation of good change for the country and the people, et cetera. Of course, he bailed us out in the late 1800s, so we didn't have the Depression earlier than we did. But I kind of am I'm trying to build us to go that direction. But like I hope people look back and see as like an agent for change. So like I really want, in a good way, like we're trying to build with our fintech the first blockchain run by artificial intelligence private universal basic income, to where people can donate and not have to give it to the government but still get a deduction for it. So like I want to be one of the people that helps solve like wealth and income inequality by helping people do better with their own stuff rather than just blaming the government. And we're doing that, right now, one person at a time, and like my whole thing is, all my peers are like, how can we get richer people? How can we get people with higher AUM?
Yes.
How can we help people lower that actually need help, like be better with what they have and create wealth, so that the world in general will be a better place, and not because the Republicans or the Democrats did it, because we did it together. Advisors and people that care about each other, and just like Kanishk said, like helping people help themselves. It's like it's cool. So brilliant. That's what I like to do.
Love it.
Love it. So
And
guys,
I'm always learning things now too, because I guess got some questions for Phil there. It's great.
And this is a beautiful thing because this can leave open the door for opportunities to bring these guys back on and share some more and go deeper into some of these things we talked about. But guys, we are so honored and blessed to have both of you on with us today. And obviously, as always, our mission and purpose, I think, was achieved today. We want to create value and really give to others amazing talent, amazing people, and you guys fit that bill tremendously. And I'm really grateful to have you on today. So thank you very much.
No,
Thank you, guys.
Thank you
Yeah.
so much.
Great, guys. Listen, I'll put all the links in the show notes. If anyone wants to reach out to Kanishk or Phil and learn more about them, I'll have all the links in the show notes, and you guys can certainly reach out and talk with them if you feel like there's going to be some value for you to have that conversation. Awesome. But guys, we knocked it. I have to say it once again.
I'm glad. Thank you.
Knocked it out of the park, man.
Phil, awesome.
Thank you, Bill.
And I want to come visit you in London there, Kanishk.
Yes, please. That's an open invitation to
Yeah,
all
me
of you.
too.
Please let me know. Please definitely let me know when you guys are here. It'll be great to get a few beers, get a meal. It'll be lovely to meet you.
It'd be amazing.
I'd love it.
No. All right. Thank
All
you,
right,
guys.
We'll see you again on the next episode of the Advisor's Edge podcast. Take care, everyone.